Welcome to The Swing, the official newsletter of the Forex Trade Room, Volume 22, September 8, 2024. The dollar index fell to 100.9 on Friday, nearing its 13-month lows. This decline follows a disappointing jobs report for August and significant downward revisions for June and July. Despite a drop in unemployment to 4.2% and a rise in wage growth to 0.4%, speculation about a substantial Federal Reserve rate cut is growing. Federal Reserve Bank of New York President John Williams supports reducing rates, leading traders to now price in a 50% chance of a 50 basis point cut later this month. Consequently, the dollar is weaker against both the British pound and the yen, down about 0.8% for the week. The Australian dollar remains stable above 67 cents as the Reserve Bank of Australia keeps interest rates unchanged. RBA Governor Michelle Bullock noted that high inflation is still a concern, but the bank aims to balance inflation control with labour market stability. In recent economic updates, Australia's trade surplus hit a 5-month high in July, with strong export growth. However, economic growth for the second quarter was 0.2%, falling short of the 0.3% expected. The Canadian dollar fell below 1.35 per USD, retreating from its recent 5-month high. This drop follows weaker than expected labour market data, with Canada's unemployment rate rising to 6.6% in August, above forecasts. The Bank of Canada's recent rate cut reflects concerns about a cooling job market, though persistent inflation in housing and services provided some support to the loonie. Meanwhile, weaker U.S. job growth and revisions for June and July have increased speculation about a major Federal Reserve rate cut, putting pressure on the U.S. dollar. The Japanese yen strengthened to 143 per dollar, reaching its highest level in a month. This boost comes as the Bank of Japan is expected to raise interest rates due to persistent inflation and rising wages. Real wages in Japan increased by 0.4% in July, and total cash earnings grew by 3.6%, though household spending fell short of expectations. The BOJ has hinted at further monetary adjustments if their economic outlook is met, and markets are now expecting a rate hike in December. The New Zealand dollar eased to 62 cents as investors weighed the impact of potential rate cuts by the Reserve Bank of New Zealand and the Federal Reserve. Recent weak domestic data, including a larger-than-expected drop in retail sales and faster decline in credit card spending, suggest another rate cut may be coming in October. This follows a 25 basis point cut by the RBNZ in August. Additionally, concerns about China's economy are putting pressure on New Zealand's trade prospects and currency inflows. The Swiss franc strengthened to below 0.85 per USD, approaching its year-to-date lows, as the US dollar weakened. This decline in the dollar follows a disappointing US jobs report, which raised speculation about a significant Federal Reserve rate cut. In Switzerland, inflation dropped to 1.1% in August, lower than expected and a 5-month low. The Swiss National Bank had already cut rates by 25 basis points in June for the second time, further supporting the franc. The British pound started September at around $1.31, buoyed by a 2.1% gain in August. The strength of the pound is supported by expectations of diverging monetary policies between the US and the UK. Weak U.S. economic data and Federal Reserve Chair Jerome Powell's hints at rate cuts have weakened the dollar. Meanwhile, stronger UK economic data and the Bank of England's cautious stance on further rate cuts have supported the pound. The BOE recently lowered its main rate to 5%, with additional cuts expected by year-end, while the Fed is projected to reduce rates by over 100 basis points this year, with a potential 50 basis point cut this month. The euro fell below $1.10 after hitting a one-week high of $1.11 earlier this month. This decline comes as investors weigh new economic data and speculate on potential rate cuts by the European Central Bank and the Federal Reserve. Eurozone GDP growth for Q2 was revised down to 0.2%, highlighting concerns over the impact of restrictive policies, particularly in Germany. Markets are now betting on a 25 basis point rate cut by the ECB next week. Meanwhile, weak U.S. labor market data and soft non-farm payrolls have heightened expectations for multiple Fed rate cuts, helping to keep the euro up 3.4% since the beginning of the third quarter. The Mexican peso fell to nearly 20 per USD, hitting its lowest point since October 2022. This decline follows the passage of controversial judicial reforms by Mexico's lower house, which propose electing judges through popular vote rather than appointment. Critics worry these reforms could undermine judicial independence and deter foreign investment. Additionally, Mexico's unemployment rate rose to 2.9% in July, and the manufacturing PMI dropped to 48.5 in August, its worst contraction in 2 years. These factors are putting pressure on the Bank of Mexico to consider cutting interest rates. WTI crude oil futures fell by 2.1% to $67.70 per barrel, hitting their lowest level since June 2023. This drop came as OPEC Plus postponed a planned production increase and amid worries over weak manufacturing data from China and the US, which could reduce demand. Additional downward pressure came from potential increases in oil supply from Libya. However, a larger-than-expected drawdown in U.S. crude inventories, down 6.9 million barrels, offered some relief. For the week, WTI prices fell 8%, marking their steepest decline since October. Gold prices eased below $2,500 per ounce, pulling back from recent highs due to mixed U.S. jobs data that raised uncertainty about the Federal Reserve's upcoming interest rate cuts. The U.S. economy added fewer jobs than expected in August, and previous figures were revised lower. This followed a week of disappointing labor market reports. As a result, markets now anticipate the Fed will cut rates by 125 basis points this year, more than the earlier forecast of 100 basis points. Lower interest rates generally support gold prices by reducing the opportunity cost of holding non-yielding assets. U.S. stocks fell on Friday due to concerns over a slowing labor market and a tech sector sell-off. The S&P 500 dropped 1.7%, the Dow lost 409 points, and the Nasdaq fell 2.5%. Big tech companies like Amazon, Alphabet, and Meta saw significant losses, with chipmakers like Broadcom and Nvidia also struggling. The August jobs report, which showed fewer new jobs than expected, added to market jitters. Comments from Federal Reserve Governor Christopher Waller raised expectations for a larger rate cut in September. For the week, the S&P 500 fell 4%, the Nasdaq dropped 5.6%, and the Dow slipped 2.5%, marking some of the worst performances in recent history. This week, major economies will release crucial economic data. In the U.S., investors will focus on inflation reports, including consumer and producer price indexes, and will also look at export/import prices and the Michigan Consumer Confidence Survey. The euro area's key event will be the interest rate decision. China will release foreign trade data, CPI, PPI, and new yuan loans. Inflation data will be announced for Mexico, Brazil, Russia, and India. The UK will report on the unemployment rate, July GDP growth, and industrial production. Additionally, industrial production figures will be released for Turkey, Italy, India, and the euro area. In Australia, the Westpac Consumer Confidence Index will be a key focus. That brings us to the end of this week's Swing newsletter. As a reminder, don't forget to tune in for Mindset Mondays with Ryan Carthage starting at 6:30 a.m. Eastern Standard Time. Enjoy your weekend and good luck in the markets this week.